Alright guys, welcome to the Trading Edge episode 10, and in this episode I'm going to be doing something slightly different because at the start of the year, since the open, we've seen lots of opportunities from a trend continuation perspective, and there's still a couple of opportunities on the radar, but I know lots and lots of you like the advanced pattern formation stuff, and there's a couple setting up, and what I'm going to share with you is one conventional consolidation pattern on the pound yen. I'm also going to share with you a pattern formation on the New Zealand dollar that I can use to potentially enter a trend continuation move. So instead of taking those conventional targets, I'll be looking at taking that extended move. So let's get stuck into it. Before we do, just to let you know that I am short euro dollar. Got short at 22.80 on the completion of the double top on the 4 hour. So pound yen, as you can see, we've just hit some consolidation here. Now, whenever we hit consolidation, we know we have a high probability of identifying these advanced pattern formations, bats, Gartleys, ciphers, butterflies, and we know this because they are a combination of retracements and extensions, and when a certain order of those retracements and extensions are met, then we know we have a high probability trade on our hands. And I'm going to share with you a Gartley formation on this pair and how you might consider taking this, because with Gartley formations we know that we have a rule for the B leg, and we have to hit the 618 for the B leg. Okay, now if market just pushes up and tips that B point, just tips the 618 on the B point, then that's what could be considered as a shallow Gartley pattern, which you might want to check your risk reward, because this is the only pattern other than cipher pattern, which I take regardless of the risk reward. This is the only other pattern that I need a minimum 1-to-1. So what we're going to do is we're going to build up our entry zone. We're going to identify our entry zone. You can see 152.90 is here. Okay, so let's draw this in. X to A to B, B to C, and a CD completion up here at 152.90. So we've identified consolidation, we've identified a high probability trading opportunity in that zone, but what I'm going to do is I'm going to bring on my risk just so I can start to see if I get a 1-to-1 risk reward on this trade. So let's just color this in red. And we're going to be taking conventional targets, so this will be a 1 in 1 out for target ones, if for anyone who takes just one target, and if you're taking target twos, then conventionally you'll be looking down at that 152.38 level, but I'm just going to use one target for this. So you can see here in this case it's slightly inverse risk reward, and the reason for that is because we haven't pushed very deep into the 618. In fact, we've just tipped it. See that? We've just tipped that 618 right there. So in this instance, what I'm going to have to do is wait for price action to push up a little bit further to get my 1-to-1 risk reward. So I'll be looking at 152.93s for my entry. So I can adjust this, 152.93, and at this point here I know that I get a minimum of a 1-to-1. So I can adjust my pattern and just wait for the setup. So we'll be looking for completion for me at 152.93. Targets will be down at, initial targets will be down at 152.58. Stops above X at 153.25. Now that's a conventional pattern in consolidation. What I'm going to show you now is an alternative way of taking targets, and this is something I found very profitable in my own trading. So you can see here we are in a bullish trend, right? We're putting in new highs, new highs, new highs, new highs. And if you're unfamiliar on how to read price action, make sure you go over and register for the Tier 1 trading event. These videos from next week, these videos will only be available from inside the platform that we've built. So it's a trading community platform. Very, very good response yesterday when we launched. If you're not in there, get in there. Alright, so we're looking essentially for a pullback, right, down into structure. Now, this is where you'd be typically looking for a trend continuation trade and looking to buy this up. Okay, now what we've got here is a couple of ways to enter. We can wait for price action to push into here and get that higher close candle, or as I drop down to the 60, which is also considered my swing trading time frame, what we're going to see is we've actually hit the 50% retracement here, which sets us up for an X to A to B, B to C, and a CD completion down here at 72.30. So I may actually get long in this video. But instead of taking conventional targets, this is where we could look to take targets at a retest of the high. So conventional targets would be here. And with a bat pattern, you don't have to worry about the risk reward, because typically, because of the completion point of the pattern, we always get a good risk reward, even if you're using that 113 inversion based stop, ATR based stop. Typically they're both the same or in the same area, and you can see here that we've got a very nice risk reward on this trade. Okay, but what I'll be doing is I'll be looking to enter this but taking targets up at a retest of the high. So I can use this aggressive entry as an entry technique into my trend continuation trade, and you can see very, very nice risk reward. So I'm going to get my orders on for this trade now. I'm going to set a buy limit order here. So the completion point is at 72.29. I want to be at 31 for my entries.
Order pending.
I'm going to set my stop loss 2 pips below this stop loss level. And the reason I do that is for front running my orders. I front run my orders just to have a better chance at a fill. And targets are going to be up here. So hopefully we can get filled. If not, I'll be looking for that higher close candle as well. So just thought I'd share with you a couple of pattern trades today, because we haven't done too many patterns in 2018. So a couple of patterns there, one in consolidation with conventional targets and a trend continuation style approach, entries into a pattern trade but using it as a trend continuation profit target. So hope you enjoyed that. If you haven't already registered for the event, the emergence event next week, you have to go to TierOneTrading.com, not the number one, Tier 1 as per the address on the top of this video. Go there and register for the event. If you've just registered for the site, that's fine, but you need to register for the event. We've had almost 3,000 entries already. So if you don't want to be disappointed, make sure you go over there now. It's a week-long event, and even if you can't make all of it, just make sure you get your name down and turn up for as much as you can, and I'll look forward to seeing you in there.